touch base with the stock of the day, which is my Magellan Financial Group. And news dropped that the beleaguered fund manager has recorded a $4 billion drop in funds under management in September. Magellan said it experienced net outflows of $2 billion in September, which included net retail outflows of $0.3 billion and net institutional outflows of $1.7 billion. The fund manager booked $35 billion in FUM in its latest update, down from $39 billion it recorded in August. Well, David, this has been a challenging couple of years, at least for Magellan, hasn't it?
Oh yeah, that's for sure. You know, I've seen it drop from July 21. It was about $55 down.
70 it got up to.
Yeah, that's right. Even
it could do
that.
no wrong. It was flying high.
Yeah, well, Hamish was a superstar.
Yeah,
That's
exactly.
right.
But you know, they've obviously Hamish is gone. They're trying to right the ship, but clearly, you know, the markets are not helping at the moment. But this really doesn't look too great today. I mean, the stock's off almost 12%.
Yeah, well, $2 billion worth of funds outflow. Mostly of that was the institutional, 1.7 billion, and 300 million of retail. So, you know, not a good look. But you know, it's for me, you know, being a technical guy, I mean, this was the get out at $55 dollars, and I've never seen a signal to get back in on Magellan, and still don't see one. So you know, it's more suffering for shareholders who are still holding on to it. I would not touch you know, any funds management group right now, given with the bearishness of the market. So yeah, I'd be avoiding this one. And but look, down here, it's a bit of what we call a capitulation. You might find some buying coming in. It's down 12%. So today, but look, that chart looks horrible. So
Yeah,
you know,
it doesn't look great.
It's an avoid for now.
Yeah, fair enough. And Mark, you being tempted down at these levels?
No, I'm not. Magellan's now really a turnaround story. I mean, that's the problem. And as Buffett says, he's not interested in turnaround stories because they very rarely turn
around.
Now, this is, at least with Magellan though, is it's still a very profitable business. They were so profitable back in the days before that they've been able to weather like a 70% drop in funds under management. There must be something like that, because they were 120, I think, at the peak, down to 35, and they're still very profitable and they're paying a very good dividend still. So that's the positive of it. So it's not like they're losing money. Most turnaround stories, it goes to woes, management gets changed, and then it's a story. The thing with Magellan, of course, is when will the outflows stop? And it's a new business now. The management's now totally different. It's a very conservative ex-future fund CEO and so on. Nikki's still there, so it's a very conservative management now compared to what it was under Hamish. Just quickly on that, by the way, there were some real lessons in that with the fall of Hamish. We always thought that the key man risk was the biggest risk with Magellan, but whenever you get a CEO that takes star status, beware. I think Twiggy Forrest has done that a bit too with hydrogen, all this sort of stuff. That puts me right off. You know, when they start swanning to Davos and on the world stage, and Hamish was running around doing massive sellout seminars on his view of economics in the world. You know, it's like ding, 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 alarm bells, and it was right. But we TeamInvest generally had reservations about their moats, because one of the things with the fund management industry is the money is hot. You know, you can look at it and say it doesn't just go from here to there and so on, but it is literally a couple of keystrokes. The one plus on this though is most of the funds that have been lost have been institutional, and the profit margin on that, going on memory when we looked at it, I think was about 0.2 or something, whereas the retail is like 0.7. So you can actually lose like $3 of every $3 of institutional money is about the same as $1 of retail.
Yeah.
So they've kept most of the retail business they had, I think, you know, just paraphrasing here. So it's not as bad as it would have been. But I think what has to happen now is you need to look at the actual Magellan's funds and say the actual managed funds, which I wouldn't put money in, but how are they performing? And if they start performing even a little bit positively to their benchmarks, whatever they are, it should stop. The funds flow should stop going out, and then I'd argue it's probably very cheap.
I guess it's really hard though. It becomes a sentiment thing, doesn't it?
Oh, yeah.
And you're constantly chasing your tail. If you've had bad performance, there's nothing, or poor performance, there's nothing worse than trying to catch up because the pressure is on.
That's right.
You know.
But their fund performance wasn't as bad as it looked. You know, the media piled on. And they lost the, what was that one in the UK called that was 20 billion? That's the one that really started.
Yeah, that was a massive fund they lost. I've forgotten the name of it.
I forget the name, but they knew that was going to happen
Yeah.
because that particular group, which was I think they were 300 million or something, but they put most of their money into active fund managers like Magellan, and they had told Magellan that they were going to change to index funds. So they warned them that the money would go. So it was nothing to do with Magellan's performance.
Yeah.
And of course Magellan chose not to tell the market that at the time, which was reasonable because it wasn't like they knew. It was flagged that at some point they were going to lose this client. And with hindsight, they would have been far better off if they'd flagged it then, taken a bit of a hit, because it was used as to prove that Magellan is cactus, and look at that, this lost 20 billion, and that triggered the outflow, of course. And of course the Hamish going under the bus, and then nobody was speaking on behalf of the company.
Yeah.
It was just, a pile on for the media.
And very, very, high conviction calls, and a couple of them like Netflix and everything were falling out of bed.
Well, he did well on that. That whole tech thing and China, it was a really good thematic until it wasn't, but it was a bit of a perfect storm. Yeah. So that came off. Hamish hit the deck with the divorce and lost the plot completely, and they lost one of their biggest mandate, all like bang, 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 bang. We've never seen that many risks trigger in quick succession.
But it's a great
perfect storm,
as you say. But it's also, from that respect, it's a really good case study to remind about, when you have those big personalities.
The only other positive thing about this is, I'm just looking at their construction of the funds here. The 35 billion. Remaining 15 billion in global equities, with the dollar being down where it is at 64, 63.
And
getting
weaker.
And weaker. And infrastructure.
Well, US is getting stronger, let's go it that way.
That's right.
Maybe. But so they should, what you're saying is that basically a lower Australian dollar beneficiary.
They should be outperforming any of the local funds, that's for sure, because most of it is...
I haven't looked at their fund makeup. They've got Microsoft and Apple and all that.
Yeah.
And they're all absolutely going to benefit from AI and so on.
Yeah.
I'm actually much more confident in those big tech stocks now in their ability to double again.
Yes.
Because a lot of it was, you look at it and say, they get to $1 trillion, how far can they keep growing? And the answer is they can.
Yeah, well, absolutely. And they've also got incredibly strong balance sheets.
That's
anyway, we're getting a bit off script.
It's an interesting one, though.
Oh, it's
more interesting than any of the others today.
No. Okay. Well, let's not for the viewers. We've got lots more great stocks coming up. So, Mark, after all that, Happy Friday, exactly. Would you be avoiding buying?
What, Magellan?
Yeah.
Oh, well, it's speculative at the moment. That's how I would look at it. I would say if you're buying it now, you've got to weigh up the risks, and do you think the outflows have stabilised? If they have, it's cheap. So it's not. I'm not saying you wouldn't, but it's not. We don't. What we're trying to do at TeamInvest is have a very high probability of certainty, and I don't think it has that.
Yeah. Okay.
Howard, my partner, has been quite negative on it forever.
Yeah.
And he's been a bit of a lone voice actually on that.
Okay.
And his argument was that the money was too high.
At some point, this is going to potentially, if they can stabilise the farm,
they will stabilise the fund.
Yes and no, we don't know. Not everybody stays around forever. Exactly.
Yeah. It's gone down a lot more than I would have expected.
So a speculative buy.
Yeah.
Okay.
Yeah.
There we go.
I can live with that.
We got there eventually. Okay.